Hi, this is Joseph. Today is Tuesday. It's May 31st. So this is the final day in passing phase one of the challenge, the evaluation challenge with My Forex Funds. Now you can see here I'm trading a 0.01 lot size on a $10,000 trading account. So here are the stats and how long it actually took me to go through this process. So we had on Wednesday, I had actually two trades. If you go back and watch the videos on the YouTube channel or on the website, the performance page, you can see that I mentioned this. So on Wednesday, I had two trades, but I only included the second trade on Wednesday, which really started and triggered this 10K challenge. I was asked by a lot of subscribers to my website if I would go through that process and actually record the whole thing so that they could get a good idea of how long it takes me to go through a funded challenge. Now, basically, the process is the same regardless whether it's a $10,000 trading account, $50,000 trading account, $100,000 trading account, or $400,000 trading account. It's all pretty much the same thing. You just got to be prepared for the percentages or the lot sizing that you're actually using. So please keep that in mind. The lot sizing is something that you control on your end if you're going to use my trade copier. Now I have a lot of subscribers who use my trade copier to get my trades automatically. So I do basically I'm doing all the trades for them. And you can use the trade copier to pass your own funded challenge. So again, going through this process will give you a really good idea of what you could expect, how long it takes for me to pass phase one or phase two, or both, and what do the trades look like? Like when am I generally trading? What's the size of the stop? What's the size of the take profit levels? Now, one of the things I can say, and I mentioned this in last week's video, I think it was last Friday, the last video that I posted, was that you can see here that there's a difference with this trade right here because there's a limited trading opportunity here on a 5-minute chart with, this is the US30 by the way. So if we take a look at this trade right here, we can see that this is relatively limited compared to, and I know I keep going back to this example, but it's a really good example that will give you a pretty good idea of what to expect. Here's a 4-hour time frame, and this goes back to April 21st. Now on April 21st, there was a move down here that was considerable. I mean, if you look at the charts, if you weren't trading it, take a look at that. You can see that this was a really big move. And then there was another one, and then we had another one here back in May. So this was May 18th. And on one of these trades, I earned 1,100 points on this move. So these moves to the downside were pretty dramatic, but they didn't happen every day. So just, sort of keep that in mind that not every day is going to produce the same results. So let's go back to the same 5-minute chart. So that's what I was looking at this morning when the market opened. Now, there are sometimes opportunities before the market opens. And what I mean by that is the 9:30 New York Stock Exchange, when the market's open for trading. That's usually when I prefer to trade these markets like the Dow, the S&P, things like that. So this is, again, the US30. I would prefer to trade after the market opens so I can watch that first 5-minute, the first 30 minutes at 9:30, right? I'm there actually at 8 o'clock New York time, which I'm in California, so that's 5 o'clock my time. I'm in California, so I'm 3 hours behind. Now, sometimes like I said, there are some opportunities here. This actually set up at about 1:45 in the morning California time, which is 4:45 New York time. Sometimes I'll be sleeping, sometimes I'm trading Forex. It really depends. This was right after a major holiday, so I really wasn't too sure how I wanted to trade this. But again, as I said, there's almost always an opportunity after the New York market opens. Now, sometimes with economic data at 8:30, there could be an opportunity, but I don't trade the split second that the news is released because a lot of things can happen. The market's moving fast. You might not get the fill that you want. If people are using my trade copier, they may not get the same fill that I get. So there's a lot of things that I can't control, and that's one of the primary reasons why I stay away from trading the split second that the news is released. But I do take the data and the reaction into consideration. Now, here is the first 5-minute bar at the New York Open. So I could see that it was moving into an area of support. Now this is a clear level of support that I had marked off, and I'll go to a larger time frame and I'll show you how I trade. It's also important that you know how I trade so that if you decide to use my trade copier, you know who's doing the trading for you. You know what they're doing, and you also want to know that they know what they're doing. I've been doing this for 22 years, so I primarily trade off of support and resistance. Now sometimes support and resistance isn't always going to be a precise number. Sometimes it will, like a spike high, like you can see right here where my cursor is, and you can see that's where the market reacted at the open. Other times it's sort of a zone of support or a zone of resistance. Every time it's a little bit different, but you need to be aware of what these zones of support and resistance actually are and what they're doing, what's going on there. So I use these principles of accumulation and distribution to determine all of that. But this morning it was running into a clear spike high, which was then acting as a low of support, which was an old resistance level. So let's go back to the 5-minute chart. So this was my setup. So I basically waited, and I knew that there was likely to be a reversal. Very often we see reversals. It doesn't guarantee that, but this is a very common pattern. So I just sort of stayed out of the way. I just waited for the whole thing to reverse. Now I'm also using average volume. So a volume average indicator, I did hide that right there. So there it is right there. So I am doing an exercise that I call counting the waves. And what I'm doing is watching the amount of momentum or the volume levels as it reaches these reversal points to confirm that it's actually a reversal. Now this is also an average volume indicator down here, which helps me between the two. So I'm not going to get and turn it into a trading lesson, but it does help me find the wave activity and the volumes associated to the waves to determine the strength and the weakness of these moves so that I can calculate and trade these reversals with confidence. So here was my reversal. I needed confirmation that this was going to be a reversal, not just that it was bouncing off of this support level, which was an old high, but also with volume. I need to see the supply and demand signature. So again, here is a reversal pattern. And I don't get in, obviously, on that break right there. I wait for a pullback, and then it moved back up. So it sort of sits right around this range right here, running into this old resistance, and then it pulls back one more time. And here, at this level, I could clearly see that I was getting the signal that I needed that was the most comfortable for me. I did miss this opportunity right here. I really wasn't too comfortable, but I was also trading Forex this morning. I'll show those in the Forex trades in another video. And here was my entry. So I waited. I mean, you could clearly see what's going on here. I'll briefly break down what's going on. If we look at the bars or the candles, you can see we've got a lot of indecision here. We've got this pullback. I'm not using the Fibonacci tool, but I know some people like using the Fibonacci tool. So you could probably find that it is a Fibonacci level. But it's not the Fibonacci level that it's reacting to. It's actually reacting off of that spike low, this area of support running right through here. It's a zone. You can see it here. And then I'm tracking volume. Volume's much more important to me than just using the Fibonacci tool. So I was using the volume indicator and this volume average indicator at the same time to help me confirm this reversal. So with this bullish engulfing candle, all I had to do was wait for it to close. This was my entry on the close, or as it was taking out the highs. My entry in this case was the 32,997, and I closed the trade at 33,191. That earned a total of 198 pips. Now I did the same thing as far as the number of pips on Friday, but on Friday when we closed, I only needed 140 more pips to pass phase one. So for this account, again, it's My Forex Funds. It's an 8% to pass phase one. You have to hit an 8% target, which is $800. I'm trading 0.01 lot size on a $10,000 account. That's $1 a pip, or $1 a point, I should say. I'm sorry, $1 a point. So I needed a total of 800 points, or $800, when I accepted this challenge to pass phase one, which is 8%. An 8% target on a $10,000 trading account is $800. So we exceeded that. I exceeded it by 58 points today, $58 today. So I did hit the $800 mark. So this will give you an idea. I started this on the second trade late Wednesday of last week. I traded it on Thursday. I traded it on Friday. No trades over the weekend. Monday was a bank holiday. And then, so no trades on Monday. And then I traded today on Tuesday, May 31st. So this should give you a pretty good idea of how long it takes. Now, I can't say that every single time I pass a challenge and I go through these phases that I'm going to hit, the targets within 3-4 days. Sometimes, the market may provide opportunities like this trade over here that I showed you earlier on the 4-hour chart from last week and a few weeks before. I mean, there's 1,100 pips in points in a move like this in some cases, and on days like that, you can achieve the the target of 8% in one single day. Now, some of the other funded companies, the funding companies, they have a target of 10%. So this will also give you an idea that I also exceeded it by 58 points. So, we're not too far away from achieving that. Another day or so would complete all of these. The first phase, the second phase, possibly this. So the second phase on my Forex funds is a 5% target. The phase one is 8%. Phase two is a 5% target, which means I only need to hit $500 in profits. So that's not going to take too long to do. I'll be trading it again tomorrow. I'll start that again for tomorrow, Wednesday, and we'll see how long it takes me to hit the $500 mark. And then at that point, that means that $10,000 account is now a live funded account as soon as they give me the credentials for that. The next challenge that I'm going to be taking on is a $100,000 account, and we'll see. It'll be pretty much the same thing. I mean, the trades are for the most part the same thing. It's the only difference is really going to be the lot sizing, and very often they're going to be 3, 4, and even 5 to 1 with the reward to risk on these trades, and I always use a stop loss. So if you'd like to use my trade copier to get trades just like this, to pass your funded account or your evaluation process to get your funded account, or if you just want to use the trade copier to attach your personal account, let's say you open up an account with $15,000 or $10,000, you can certainly use my trade copier to execute these trades. They're basically the same ones. I do trade primarily the US30 after the stock market opens, and I'm also looking for trade opportunities with the Forex majors.